review. We're going to be looking at the trading week of October 13th, 2025, and it's probably going to be a doozy after what happened on Friday. So we'll talk a little bit about that. We'll get that out of the way first. Monday, we have no major data. It is a U.S. bank holiday, as well as a Canadian bank holiday. The bond market is closed. Equities market, futures markets are open regularly, but I would expect volume to be potentially considerably less, just given the fact that a lot of people aren't going to be on desk and the bond market's going to be closed. So keep that in mind. Tuesday, we have Fed speakers a lot of Tuesday. We don't have anything major other than Powell at 12:20. I don't know what he's talking about, but I just have noted, obviously, that he's speaking this day. We have Wednesday. We don't have much. We have Empire State Manufacturing Index. We have Fed speakers from 12:30 onward, Beige Book at 2 p.m., which doesn't really matter from a trading perspective. Thursday, we have retail sales jobless claims and PPI all scheduled on TBD because obviously the government shutdown. We don't know if these are actually going to be released. Not sure. Nobody knows, so just keep that in mind. Obviously, I think ahead of time, if they are going to be released, we'll find out, but we'll see, I guess. And then Friday, we have, again, no major data scheduled because everything potentially coming up Friday, again, is considered tentative or TBD, because we don't really know what's going on with the government shutdown. So projected range on the S&P 500 for this week is about 125 to 135 points, depending on how you're calculating it, based on the Friday at the money straddle. So obviously that's double the expected range that was priced in last week, considering the volatility that we had. VIX jumped quite a bit. Volatility increased quite a bit towards the end of the week there. So market's pricing in, obviously, some bigger moves potentially to happen. So let's just quickly look at the daily. Well, this is 4 hour, but we'll look at some higher time frames here, just with some really basic charts, just to kind of show where we're at in the grand scheme of things here. So if we go to the daily, we had this, obviously, Friday. We won't talk about the beginning of the week. It doesn't really matter. What happens is what mattered on Friday. So obviously, Friday, we have this massive dump. We have one of the biggest long liquidations we've had in recent memory, just as far as speed and time goes. And we've dumped right back into the 50-day simple moving average. This is the full extended sessions. So we've dumped in after hours. We dumped right back into the 50-day simple moving average, which is 65.60s here, as well as the prior 4-week August balance range that we broke out of, that triggered this big move up, or one of the triggers of this big move up. So the big thing is, for me, looking at this, is that we're trying to hold a prior period of balance on a longer time frame. So we're trying to hold prior 4-week balance. We're trying to hold the 50-day simple moving average. It's not necessarily surprising that we stopped here. The move itself, the size and the speed, very surprising to me. But the fact that we're holding, or trying to hold, basically August highs into this prior period of consolidation is not surprising. So the big thing here on the S&P 500 and on the NASDAQ, because we're doing the same thing on the NASDAQ, 50-day simple moving average, prior August, August range, August monthly highs, August balance range right here, is whether or not we're able to basically find some support here. The simplest terms possible, taking out, auction theory, everything, just simplest, broadest terms possible here. We're looking at a higher time frame, big liquidation, and we want to know whether or not this prior period of consolidation from 65.40s to 65.20s, prior monthly highs, is this going to hold? That's all that really matters here. So I'm going to go through a little bit more detail as far as individual levels I'm looking at and kind of scenarios I'm thinking of here. But the big thing is, if buyers are going to show up, they have to show up here. They have to show up on prior periods of consolidation that were prior resistance and flip those to support. That's what you want to see. If you want to be a dip buyer, if you want to buy the dip on this, if you're looking for, continued highs, which is entirely possible after this big liquidation, or potentially a period longer of liquidation, you want to see prior periods of balance and consolidation basically continue to hold the support and offer a base for you to buy to continue higher. So with that being said, let's get into a little bit more granular on what happened. So obviously, period of consolidation, blues were firing for me. I'll talk a little bit about this here too, because I talked about this in the last video. Blues on my algo basically are telling me period of stagnation and volatility. And that is what we got. So when I see these fire, I get skeptical of directional continuation in the direction that we're going. So in this case, it was an upward moving market, trending upward. These started to show. I was skeptical of looking for big continuations higher, I guess rightly so. But did I expect a dump, a 3+% move down in a single day? Absolutely not. And it was triggered by the market was in a position to potentially have at the beginning of a correction, but the size and the speed of this correction, obviously the tariff news and Trump's tweeting obviously triggered this, and just basically things snowballed. And when you have this much compressed range for this amount of time, you start triggering long liquidations pretty quickly, and obviously that's what continued to happen. And then we dumped another huge amount after hours into close. So we have an enormous range from Friday. So the daily time frame is one time framing down with this move. The weekly time frame has shifted to balance, which is important. The monthly time frame continues to one time frame up. So the critical thing for buyers is twofold here. That chart that we looked at the beginning, 65.40s to 65.20s, we do not, if you want to be a buyer, a dip buyer on this market, you want to see this hold. You want to see last week's ETH low 40s into 20s. You want to see this hold. You want to see volume start to build in here, and you want to see good lows form for moves back higher. What you really need to see, if buyers are going to have some continuation here and potentially try and negate this long liquidation and attract new buyers into this market, you need to see last week's RTH low at 65.90s. You need to see this recovered. So this giant long liquidation took out basically a month of range and set a new 4-week balance range. And then obviously after hours, we puked below it. You want to see 65.90s basically rebid and hold and get us back up above 66.40s. You want to see us negate this after hours move down, this, capitulatory, I guess, in a sense, move down. And you want to see us get back above 65.90s and then start building range and value and start building a base in this range here to get us back up and start backfilling this massive puke down. Whether or not we do that, or whether or not this is the start of a bigger correction move down, honestly, I don't know. And these are the things I don't try and speculate on. I just follow what price is trying to do. I think as a trader, that's the simplest way to look at the markets. A lot of people are going to get into the camp of, bull and bear. And there's a lot of noise online about, people that have been calling for a corrective move for months, even though they've got blasted as the market's 1,000 points higher. Just ignore all that. All we basically really need to know is whether or not there's acceptance above or below this prior period of consolidation. So 65.40 to 65.20, if we start to build a base up here and we can start to find buyers accelerate us back up 65.90s, then we can get some long trades back up and have some technical fills of this gigantic correction move down. This blue was looking for an extreme down of range, and obviously we blew straight through it. So this is invalidated immediately. So I'm not looking at this from intraday. I was looking at this as potentially to hold. Obviously we closed well below. This is not valid. So the algo was looking for a hold here. Didn't happen. Puke straight below. I'm not looking at this. So that's going to be my plan this week for the S&P 500 as well as the NASDAQ, and we'll look at that in a second. But 65.40, 65.20, this has to hold. If we start accepting below 65.40 to 65.20, then the midpoint of that prior August balance range is down into 64.50s, and that's almost a perfect 5% correction to the highs. If we start accepting below this range, this is where I'm looking. So we could potentially have a decent short setup if we start offering down in here to look for this. But as far as what I'm looking for intraday, first thing will be, do we hold here? If we don't hold here, I'll be looking down here. And we could have potentially a short trade down here, and we could have potentially a nice low form anywhere in the 65.40 to 64.50 range. So you have to be open to that as well. I'd be a buyer, again, if we start to hold inside 65.90s. So if we can hold inside 65.90s, I'm going to look for those long rotations to basically backfill all this poor structure. And I think I'd probably just stay long until I saw 66.80s, that big pivot I was talking about prior, tested. And if we start holding above 66.80s, that's when I'd say, okay, this is going to get negated and we're probably going back to the highs. That's how I'll look at it. So obviously it's a massive range. It can't be super specific on, particular levels, because when we have volatility like this, we have very, very big levels on higher time frames that are still being respected. Key is whether or not they continue to be respected. NASDAQ is exactly the same. So NASDAQ, again, I'm going to be looking at the 50-day simple moving average, as well as this, so 24090s to 24030s. Again, this has to hold, and what we really want to see if we're going to be on the buy side of this market is a recovery and hold of 24380s. It's going to be the same idea for me here. If we get inside 24380s and we start to hold, I'm going to be looking for those long trades to backfill inside this massive puke and liquidation move, and I'd really like to see it basically back up into 24800s. To basically back test the 20-day simple moving average. And again, I'd expect this market to be very, very weak if we start getting below 24030s, and I'd be looking all the way down to 23550s. And we have to be open to potentially some dip buys in this 2400 to 23550 range, I'd say. So broad view of the market right now, because when volatility picks up like this, you kind of have to be open to either situation. It's going to be very news driven as well. So if we have, Trump come out and tweet certain things about tariff policy or, retractions on current stances, we don't really know, right? Like we're in a period of volatility now. We just basically nuked, a month of price action in the span of about 4 hours. So just be open to anything, be open to either side. Look around those big spots on higher time frames. So I'm trying to keep my discretionary trades very limited to giant places on higher time frames. If I have some things fire from like an algo perspective intraday, then I'll potentially be looking at that as well. But the big thing for me is just basically steering clear of some of the micro levels and just looking at how we react around these big spots and whether or not I can set up a 2-300 handle trade on the NASDAQ, if around, 2400, or pardon me, 24K, or, 24-300s. These aren't going to be small moves. These are going to be big, wide moves as volatility picks up, as spreads start to move wider. There's going to be a lot of, whipsaw when we have a down day like this as well. So as far as how I position these things, stops based on ATR will open up, so stops will be quite wide, and positioning will be smaller in these situations. So that's how I'm gonna look at this week. It's gonna be tricky. I hope this helps. If it does help, please subscribe to the channel, like the video. If you like the video, leave a comment if you have any questions. I appreciate your time. Thank you very much.